Ring, ring, ring. Happy Sunday. And hello, priest. Welcome back to the magical Krown's Crypto Cave.
Well, welcome back to Krown's Crypto Cave. It's a nice little, very overcast and dreary, rainy Sunday morning over here from Chicago, Illinois. A very special day as well, because actually Elsa will be leaving today, which I'm very sad about. And perhaps she might even say goodbye as well while she's here.
I'm gonna miss you. Take good care of Krown.
Oh man, how beautiful, how sweet that voice is. Anyways, we got plenty to talk about because today is a nice little Sunday, long-term analysis day. But I will be keeping this one a little bit on the shorter side, just because I do want to maximize some time. And without further ado, let's get into the actual live scene right now and talk about some goddamn magic and money. So let's hit the button and see you in there. But I've almost forgotten. As always, wish you the best and the happiest of the happiest. As always, wish you well, my friends. Anyways, Bitcoin over here. Actually, I want to go back down and start on a daily. Bitcoin on a daily thus far doing exactly what we spoke about yesterday. Coming back up, testing the white 200 moving average on the daily, and then coming back down directly right after that. Of course, taking a little bit of time in between, but you know we're dealing with weekend price action, so gotta adjust for the ether of it all, I suppose. Anyways, Bitcoin essentially just playing out that range between about 7,800 and about 8,300 to the upside. Now, as long as we're kind of stuck within this, between these two major moving averages right here, the blue 377 exponential moving average to the downside as our support, and our white 200 moving average to the upside as our resistance, that's all that I see right now. It's just range and behavior. Now, of course, looking at this right here, it is shaping up to be having the characteristics of redistribution, coming off of this Wyckoff distribution top right here, getting our first markdown, and now after a few days of kind of letting this one go through, it is shaping up to be redistribution. Although not necessarily set in stone just yet. I'd really want to let this go on for a couple more days, but I would imagine that the next big thing that I'd be looking for is either a break below the blue 377 exponential moving average, which I would then target a move down towards about 7,200 to 7,000-ish region, or a break above the 200 simple, which I think is a little bit less likely, but if that were to happen, our more immediate resistance would be coming in right around the 200 exponential moving average right here. For full disclosure, I am delta neutral right now. I have no upside exposure. In fact, I'm a little bit, I actually have a little bit of downside exposure, except it's just such a small number that it's not really even worth talking about, really. Anyways, as far as I consider it, zero exposure, and I don't really care to have any exposure until we actually break below this level right here, at which point I'll be happy to take a short, or break above this level right here, at which point I'll be happy to take a little bit of a scalp long. But even breaking above the white 200 simple moving average on the daily doesn't really do it for me. Unfortunately, Bitcoin has to do a lot of things to unfuck itself from my perspective. The biggest thing for me would be getting back above the breakdown point, although I do think that you could make an expedited decision perhaps right around this 9,100-ish level right here. Actually just a little bit above 9,000. I think this is 90, yeah, it looks like 90-50-ish region right here. If we could close dailies back above there, I would immediately switch around from a bearish bias to a bullish bias, but as you can see, that's pretty well and far away from happening. And as long as we're living below these two major moving averages right here, especially, I am, leaning towards more downside overall. And of course, because we are looking at the daily, we are starting off this, I do want to talk about, of course, the greater formation, this massive, whether you're looking at it as a descending triangle or a symmetrical triangle, they're kind of one and the same as, as far as the measure move goes. And the measure move from this guy is still very much active and still very much valid and still very much pointed all the way down towards about 7,000, a little bit lower than 7,000, actually towards 6,700 to 6,800 right here. So it is still a massive consideration on the whole. And even though we are kind of, being picked up off the blue 377 exponential moving average thus far on the daily, I mean, that is to be expected on your first couple tests down. But, if we spend too much time grinding this out, I will be looking for the next leg about almost another $1,000 lower. So a very tradable event once again. Anyways, I've actually written out a little bit of a thing for me to go off of today. Not like actually writing out a fucking script, but just going through like lower time frames, medium time frames, so that could be a little more coherent. I've already broken that by just talking about the higher time frames to start this out. I want to talk about the lower time frames. Let's look at my list over there. But let's go into lower time frames right now. We'll go back to BitMexico and slide on down to a 4-hour total time frame right here. And as you can see, the yellow 21 exponential moving average harassing price action once again. And as long as we're below there, it is still trending. I mean, we still have lower highs and lower lows the whole way through. Here's your lower high, or sorry, here's your high, here's your lower 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 high, and then we have an assortment of lower lows as well. and kind of working on one right now, it looks like. So we are still trending right now, even though we have found a little bit of a base support right around that 7750-ish region. But if we put on the drawing tools, I do believe that we're operating in the bounds of something like this being governed essentially by the yellow 21 exponential moving average right here. So if you are looking at the lower time frames and you are trading these, then I would be looking for the next trending move to happen if we get maybe like a 4-hour total closing below this 7900 pivot right here. Technically, that would initiate a measure move off this descending triangle, although this ascending triangle not fully perfect right there, which would initiate a move technically all the way down to, if we can pull this out, yeah, it would be towards this next this next liquid zone right here that I have between about 72 and 7300, or sorry, is that 71 and 7250? It looks like somewhere down around here. So it does have good confluences with matching up with the next target, so to speak. And of course, you know, if Bitcoin were to bounce off this horizontal support once again, as we spoke about yesterday, which was likely to happen on the next test down, which we are seeing right now. But if we were to actually reverse back around and take out the 21 exponential moving average to the upside with a 4-hour total closing back above about 8250, which we have been unsuccessful in doing thus far, then I'm targeting to move up into this blue box territory right here, this liquid zone, somewhere between about 8600 to 8750-ish region, which you'll notice is also confluent with the daily 200 exponential moving average right here. So the daily major moving average is actually getting things in a lot more of a coherent and just easier to look at way. But because I do want to look at the lower time frames and look at our momentum oscillators and speak a little bit more about this, there's a few more things to be aware of right here. So we have 4-hour Stokes once again crossing on the downside, and that's accompanied by 4-hour RSI also losing the exponential moving average right here as well, whilst being extremely comfortable within the bearish control zone the whole way through. This to me typically does line up for another push to the downside, and the good news about that is that we likely will be building some divergences on on your 4-hour RSI. But the bad news is that would suggest that, well, we have to make some lower lows on price action to actually get that as a possibility, and we have to see this RSI come somewhere back down around the critical zone. But it's, that would offer up likely the next sort of intermediary bounce play, I suppose you could say. Anyways, in that rhyme, so it's true. Anyways, I'm curious what the 3 hours doing, as this is a fresh look on all the charts for me. We have 3-hour Stokes going down from the same posturing as the 4-hour, 3-hour RSI, pretty much the same thing as a 4-hour as well. What about 2-hour? 2-hour Stokes are down. What about hourly? Hourly is going to be up. So we are seeing most of them agree with each other as we approach the base support of this structure on the lower time frames. If you are looking at it as as such, it is technically a descending triangle, which of course is more on the bearish side. But I wouldn't be front running the break just yet, just because these are notorious for kind of faking out in this in this posture right here, then pop back up, and maybe I still think that we could very easily have another run back into 86, 8700-ish territory right here. It's just it's just until we actually get the break of this next level, I would be very, 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 very defensive against any, if you are going to play this to the downside, I'd be very defensive against any sort of a quick move up here to kind of wash out all of these shorts. It would take all of the stops coming in from the 24th of September, it looks like, on all the, all the people who just joined the party. Then again, when you actually do have a switch up from from bull to bear, usually that first leg is not going to give you a second beautiful entry to get in off the first major breakdown, meaning that, we're probably, it would be very, very unlikely to rally all the way back up to like the $9,000 level and then just fall over from there once again. So that is why I look at this blue box territory right here as like a major pivot on the market to the upside. If we do get back above there on a daily total closing basis, even on a 4-hour total closing basis, I'd really start to entertain the possibility that perhaps this is, perhaps this is a fake out to the downside, just washing out, just washing out over leveraged longs, and then we can trend the upside once again. But I'll be talking about a little bit later in this video why I think that that's rather unlikely in the current stature on Bitcoin. Anyways, now let's get on over to the medium time frames, which I define as like the 6 through 12 hour, we'll call it. And 6-hour right here, not really telling us anything unique about price action. In fact, I just forgot one thing about the 4-hour. Let's go back in time a little bit. So I want you to put this sort of picture in your mind's eye right now, and you can see that we're being held down by the yellow 21 exponential moving average. And once once price action is below both moving averages, that's when we trend, as you can see. So when we have, basically when we have like this, it looks kind of nasty. But essentially, as long as we're being rejected by the yellow 21 and price action is below both of those major moving averages, we are trending. Well, this looks extremely similar to what we've seen in from a historical standpoint on the last major break from 6,000 down to 3,000. A very, 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 very similar piece of history, I think, in multiple ways, not in every way, but there are certainly a lot of confluences. Anyways, you do see off this first major drop off from the 6,000, from the 6,000 to $5,000 low right here on the first leg. We spent about the next like 3-4 days going sideways, of course. But look at this, the 21 exponential moving average on the 4-hour digital time frame governs price action the whole way through, and we really don't even get it back until a couple weeks later, about a week and a half later in late November, as you can see right here. And even then, the damage isn't done just yet, but the momentum has certainly very much subsided. So as long as we're below that 21 exponential moving average, and especially below both the 21 and the red 10 simple in the current times on Bitcoin, it makes it very difficult for me to for me to not look for bearish continuation, essentially. And of course, with momentum oscillators agreeing with that makes it even more nasty, I suppose. Anyways, go over here to the 8-hour digital time frame. Let's see if anything else lines up here. We do see 8-hour Stokes actually pointed up from the critical zones, so I actually do kind of like that. 8-hour RSI. Do we have hidden bearish divergence here? We do have hidden bearish divergence here, but that has mostly played, like the easy play on that has already kind of played out between this point and this point, coming back down to our lows. Maybe we have a little bit lower, once again, sweeping it up. But, for all intents and purposes, as far as what I was looking for coming into yesterday, to talking about, the bearish divergence on like the 4-hour coming back down to our lows, that's mostly played out. So I think that's kind of a moot point right now, but we can move on over to and check out the 12-hour digital time frame, which is what makes me, again, apprehensive on looking for continuation like immediately, meaning like immediately, like today. Holy shit, that was loud. God damn, man. But hey, good to meet you, Shuki. Good to meet you, man. Welcome to the K, my friend. Anyways, on the 12-hour digital time frame, we actually do see 12-hour Stokes. Oh, actually, they're not. They're not to the upside right now. They were certainly yesterday. Right now, you can see that there's pressure onto the downside once again. So that first twist is typically a fake, and of course, we also do have the 12-hour death cross going on right here. The green 55 exponential moving average crossing the downside of the purple 200 exponential moving average right here. That is a very, 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 very nasty signal, because in the history of Bitcoin, we've never gotten a death cross on the 12-hour digital time frame and not played out, a deeper correction essentially, or a more long-form correction, or just not continued to the upside right afterwards. Anyways, the last time that we got the golden cross was right on over here on 2nd of April, as you can see, or sorry, 1st of April, before all this massive girthy green dildo action to the upside. Death cross took us almost all the way through 2018, although very, very sloppy on the actual entry itself, but that's why you don't blindly trade it. And then going back to the prior bull market, which is what I really want to focus on right here, and kind of this is going to crack into discussion of why I do not believe, or why I believe that we've seen a major change of behavior on Bitcoin. But I'll shape up the discussion a little bit later, but we'll start it right here and just kind of remember this one going forwards. But Bitcoin during its bullish markets has never gotten a death cross and just gone back up. In fact, we've never even gotten a death cross during the bullish markets because, well, that's one of the big ingredients, of course. Anyways, you can see that our last golden cross leading up into the last bear market to bull market switch up here in 2015 started right here in October 2015, and we never even, we got close a few times to getting a death cross, but we never got death crossed. And going all the way through from that price point all the way up to our $20,000 high. It's one of those things. It's very telling of the overall phase that we're in Bitcoin, in Bitcoin price action. Same thing back on over here. Bitcoin does get a Bitcoin does have a generally upwards market from here 2013 to 2014. We get the golden cross and all the way through, and then of course the one before that back on over here in 2012 all the way to 2013. So those are very, 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 very important to me to kind of decide, or look at the general market phase. And the fact is that we do have the death cross initiated on this, which consists with Bitcoin's history in mind. We just have never seen that, and then just pop back up and lead on to a bull market. Like immediately or anything like that. Usually price action gets damaged. So, that is one of the big things to me going on right now, even though we do see momentum oscillators kind of lose a little bit of their luster right now. That could very much lead up to a tradable bounce. In fact, some of these bounces can be quite impressive as you know, but do not confuse bounce with reversal. And again, my sort of key criteria for judging reversal is I need to see a daily total closing, technically a back above, at the very least 8750, but a 9200 would do it for me. 9200 would make it like a no-brainer. 8750 would make it very, very interesting and good enough to take a position for myself. Although this is not financial advice, I'm not a financial advisor. Just kind of sharing what I do in these exact sort of same situations. All right, so now let's go into the higher time frames, and then we'll talk about, and then we'll actually get back into the conversation of why, why this is different to what, a lot of people are like looking at in the past, trying to make fractals and saying that this is just a normal pullback, bro, and we're going to be going back on to all-time highs. No problem, just today. Anyways, daily right here, we do see. Well, I guess that's I should save that for the next conversation, but we do see daily RSI. It's going to be building divergences here, but as of right now, no divergences to be found. And that does line up for continuations quite simply. And of course, we already spoke about the major moving averages on the daily right here, 200 simple and 377 exponential moving average. Though that kind of offers up the next sort of interim play, break above the 200 simple, looking for the 200 exponential at 87.50. So what, like a $400 play there? Not bad. It's actually a 5% move nowadays as Bitcoin's trading in the $8,000 region. And break below this 377 exponential moving average at 7,800, and I'd be targeting moves down towards, well, at the very least 7,200, and then realistically, I'd likely be looking for moves into the 68, 6,900-ish region, as that is the measure move off of the full triangle right here, of course, and also line up with the 236 Fibonacci tracement, which is going to be a bot and algo target. The second that the 236 is, or sorry, yes, the 382 is lost and sold off on, it's typically going to be your bot algo target. Anyways. As it is right now, daily oscillators, we actually do see daily stocks getting way down there, but still no cross up is still no cross up. And I would be very, 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 very clever in the way that I look at this, just because until we actually do get a confirmed cross up, and I mean like confirmed with a day's tick on, on that side, then I would really not front run those decisions, because those are going to be notorious fake out zones. Looking at, we already looked at daily RSI, daily moving averages, we already caught that. Fibonacci's got that as well. Let's look at the volume profile and see if that lines up with anything. I would imagine we do have something coming down around that next target region. Let's pull it back out. When in doubt, pull it out, as the saying goes. And yeah, there we go. In fact, we actually even have, we're actually kind of stuck in the next higher value nodes right around 7,800. The one below this actually comes in right around that low 7,000, this little node right here. And then below that, it's actually kind of a free fall into the upper 6,000s, which does line up with that secondary target a little bit deeper off the descending triangle that we put in over the last 3 months. Anyways, so we do have good confluences there. I do like that. Anyways, turning that back off, let's go over and check out the 2-day. 2-day also kind of, using the 200 exponential moving average as support, but looks to me like we want to grind it again. It does look like we're going to try to put in a little bit of structure there. 2-day Stokes still very much down, and you can see the trend line has been absolutely harassing us for the last couple months. Not only that, 2-day RSI extremely comfortable in the bearish control zone. Again, wouldn't take too much to get a pity bounce for it, but I'd imagine that probably comes after we get another test of the 200 exponential moving average right here. 3-day, what's the 3-day looking like? It's just looking like a more nasty 2-day, actually. 3-day Stokes in free fall. 3-day RSI, same thing. 3-day Jewel was actually the big tell of it all. So we got a decent sell signal right here on the 27th of June. That was coming at actually the $13,000 high right here. But the more obvious sell signals was the perfect one right here, and then the continuation sell signal right here. So that got you in at about $11,000 right here, and then again to either hold the sell signal, or sorry, to hold the short, or to add to the short right around 10,300 right here. That's why 10,300 was such a big deal for me. As soon as we lost 10,300, I could no longer be immediately bullish. In fact, I mean, had to be bearish, reluctantly speaking, at that price point. But hey, at the end of the day, we're fucking traders, so have to, be able to, well, look at it innocently and change your mind rather rapidly. So yeah, looking at this, the Jewel once again gets it right. And this is why I was talking about the Jewel as probably the biggest force from really, making me full on bull. And from that, even from that secondary continuation signal down to where we are right now, that's 26.5% move. I mean, that's powerful. And that's why I was looking for something like that, just because, well, the Jewel when you get a signal on the Jewel, on like on a higher time frame like the 2-day or 3-day, it's not just going to go for like a 5 or 10% move. It's likely on average it's going to go for multiples of that from what we've seen in the past. Anyways, I think we've spoken about most of the things that I want to speak about on the higher time frames. I suppose we have the weekly and the actually let's talk about the weekly and monthly and quarterly now. Weekly coming down all the way to the 55 exponential moving average right here, wicking off of it thus far, and I want to speak directly to this for a second, just because the 55 actually does have some pretty interesting overlays with price action long term. And And you can see that almost, actually, it's not almost never, but literally never, the first time that we come down and test the green 55 exponential moving average on the weekly, we never break it on the first try, ever in the history of Bitcoin. We've gotten some pretty nasty wicks below, no doubt about that, but we've never broken it on the first try. In fact, very rarely do we even break it to begin with. And as you can see right now, Bitcoin has come all the way down to test it. The problem with this is essentially CMEs and GBTC, which have already closed for the week and will be opening up, or CMEs will be opening up later tonight at 6 p.m. Eastern Standard Time, and GBTC will be tomorrow. CMEs closed below the 55. GBTC also, if we can get it right on over here, closed below the 55 exponential moving average right here. Could it be that we actually do see the first time that Bitcoin does this in its history on spot? Well, I'd say still I'd put the trend of spot above what we see on CMEs and GBTC. But if you do see this weekly close below the 55, which would be at 7,700, about a little bit above 7,700, then I would look for this to rapidly. I'd look for this rapidly to hit the 89, actually, which is going to be much further south, probably in the 6,000s region, I'd imagine. Yep, and there you go, right around actually low 7,000s. It looks like 7,000 even, actually. So right in line with that next target. So yes, if we were to do that, then I'd look for this next week to come into the 89, somewhere right around 7,000 bucks, and then probably play out the same sort of bounce, and then we'll come back and rediscuss it. Maybe the bounce turns a reversal, maybe not. I'd imagine at the very least we get a pretty sizable bounce, 10-15% bounce, maybe more, and then after that we'll have to kind of dig in a little bit deeper. But as it is right now, Bitcoin is holding off it on the weekly, and I would imagine that if we actually do maintain above it, if we do close above it on this weekly basis, it does certainly offer up the potential that we do create a range, playing out these lower 8,000s for the next week of play, like actually timing things right now, which I don't really believe too much in, but when you kind of look at it from this perspective, it does make a little bit more sense. Anyways, putting back on all the major moving averages right here, and bringing up our momentum oscillators, we see weekly Stokes still very much nosediving the whole way through here. I mean, just extremely nasty. Weekly RSI nosediving as well. Although usually the first time that you test the bearish control zone after being away from it for a long time, it will reject, just like the opposite for the bullish control zone. Very often you see that. Let's go check out quarterly as well. Let's go check out monthly and then quarterly. So here's where things get a little more nasty. The monthly is kind of in free fall as far as I'm concerned. The yellow 21 exponential moving average and the red 10 symbol are pretty much one and the same. They're synonymous, and they're right around where? They're right around the 6,800-ish level, which is exactly in line with that measure move off the descending triangle and symmetrical triangle that we looked at over the past 3 months. And not only that, but if we bring up the Bollinger Bands, the reason why that last major move below our last low was a huge deal is because it destroyed the structure and now confirms this as a rejection. This is now to be interpreted as a rejection off the top Bollinger Band. Before, you could look at it as a consolidation at a high level, which is incredibly bullish and very, 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 very good. But the second that we took out August's low was the second that we destroy this structure and the downside is initiated. And typically, after you reject from your top Bollinger Band, you're going to come down and test around the median Bollinger Band, which is where? Right in line with the yellow 21 on the monthly as well, which is right around 7,000 bucks. So just yet another thing coming in right around that, that target area. So very, 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 very many things pointing this, in this region, which does make me think that we do get down there, and we likely do bounce off there because there's going to be a lot of bots and algos targeting that region. So they're going to be closing their positions there at the very least, if not maybe opening bounce scalps. And potential reversals. I mean, you never know who's actually buying there, but for now, the higher, with all time frames having all these confluences, it does really increase the probabilities that this actually does play out. So I would certainly not rule out another major move down. In fact, if we were to, from a higher time frame standpoint, even close below the yellow 20-month moving average on the monthly, that's when I start to actually get super bearish, looking for a move all the way down to the mid to high 4,000s region, which is what a lot of alts have actually done. So this is the most concerning thing for me, is the fact that most alts have just completely fucking fell through the roof. Well, Mr. Beardall doesn't have enough price action history to go over it, but you can see this one just confirming a lower high right here and looking like it wants to kind of trend. Mrs. Litecoin, what's she doing? She's doing exactly what I just spoke about on Bitcoin. If Bitcoin does blast through the 21 and close below it, which by the way, it closes tomorrow night at 8 p.m. Eastern time, then I will look for a move down to the 55, which will be below 5,000. That would be sub 5,000, but not before then. Again, have to be very, very deliberately clear. Until that actually happens, I'm not looking for that move to occur. Stellar, what's Stellar doing? I mean, it's like this one just blasted through all of them. There is no such thing as support in this one. Just kidding, but kind of true. Monero, what's Monero doing? Same thing as Litecoin, you know, blast through the 21 exponential moving average, and then what's your next stop? 55, and this one even looks like it might. It's looking like the 55 struggling right now too. Ripple, same thing. Never really got a chance above though, to be fair. What about EOS? EOS, same thing, but doesn't really have a 55 in there, but back down to the prior lows. Same thing with Neo, back down to new lows. Tron also has, I believe, new trending lows as well. And Bcash creating lower highs and trending. Zcash, lower lows and lower highs, so down the whole way. And again, you know, that's what's very concerning to me, because we typically see this market move together. Now, is Bitcoin just that strong that it's not going to show it in the same way as altcoins? Maybe, it's possible. But typically when the whole market looks one way, typically we move that way. And the majority of the market looks like more downside. And it's not like Bitcoin's the picture of fucking health and fitness right now either. I mean, Bitcoin looks, I mean, it's nothing bullish about this chart right here. There's something bullish about like the fucking yearly chart, but if you're looking at this right here, this is not bullish. Anyways, okay, cool. Let's go check out expected moves as well. Expected moves are also pointed down right now, as you can see. We did get that slight move up yesterday to test the top of the top of the first deviation, exactly as we said, right around 8,300. It was rejected, and down we go to test the bottom side of these, the first deviation. Again, the bottom side lining up pretty damn well with our bottom support, right around 7,800. So right in that pocket as well. So just offering up good confluences that if we actually do break this, we likely do start trending once again. And at that point, you know, we can start to talk about those those downside targets become a lot more tradable for, I suppose. Anyways, let's now talk about the big topic, I suppose, which is everyone's trying to figure out, is this just a pullback before the bear shakeout and we're just going to go straight up to the fucking moon, or is this actually a full-on reversal that we're looking at here and we do likely head lower? Well, I would say the latter's more likely. The reason why I say that is because what we're looking at right here is a change of behavior. And every time that you have a change of behavior, it implies that the form of behavior is no longer the trend anymore. And the form of behavior, obviously, to the upside. This one, a reversal to the downside, obviously. Anyways, I don't want to get too facetious with that. But my point is that on just about everything that I look at, we are suggesting that this is quite literally a phase change. So let's get into it. First things first that I notice, the breakout of this descending triangle right here does have volume confirmation on it. I think this is best seen on something like Bitstamp right here. You do see Bitstamp having a massive spike in volume just the other day, but my GDAX chart is a little bit more clear because I haven't been fucking around with it too much. So you can see that again, you know, we have the breakout out of this triangle to the downside, volume is accompanying with it. That confirms the breakout as far as I'm concerned. We are below many major moving averages, especially on the daily. The 200 exponential moving average and the 200 simple of note, of course, as well. The reason why that is important to me is because, well, we've never closed, not even once have we closed daily totals below the 200 simple or 200 exponential moving average in a bullish market in the history of Bitcoin, and especially never opened and closed below. But going back into our last bull market, you can see back on over here that Bitcoin, you know, I mean, yes, we test it many times. We test it, that's completely fine, even get major wicks below it like right here, but we never close below, that's for sure. And we can go back into the history of Bitcoin, and this is true the whole, you know, throughout the whole history of Bitcoin, all the way to the genesis, essentially. The only times that we close below the 200 exponential moving average and the 200 simple are during extremely nasty bear markets, usually to the tune of like 70 to 80% pullback corrections. This one right here, 83% pullback. This one right here, obviously another 88% pull. Jeez, that's not a pullback. It's a fucking dump. 84.5% right here on the most recent one. So you can get an idea of exactly what those typically look like. Not only that, but speaking on the topic of pullbacks, which I did not talk about yesterday, and I really want to do a deep dive into this today because then I can leave this video here and I can just point a reference to it. But as of right now, we've played out about a 44.5% pullback from top to bottom. That is the biggest one. That would be the largest one technically in a bullish market if this were to pull through. So what I'm essentially saying is that we've never seen a pullback this big in a bull market. We've seen a pullback, a little bit north of 40%. I think this one right here is of note. This one right here at about 40% right there. This guy right here, maybe another big one. This one right here, about 40% even. And all the other ones that I've looked at, I believe, are in the 30s. On this one, 34%. This guy about 33.5%. This one right here at about 39%. And then these ones, obviously a little bit less. So my point is that, this is a little bit out of the bounds for what Bitcoin typically does on its, on its bullish retracements, I suppose you could say. So again, this isn't like the most important thing to me, but it does matter. And it does just kind of add up onto the bearish case, I suppose. Anyways, on top of that, what else do we have? We do have historical volatility percentile, once again, expanding to the upside here. So, sorry, let me rephrase that. We see historical volatility percentile expanding while price action is breaking out to the downside. So when volatility is expanding, it's essentially telling us that the trend is emerging. And when we see a major structural break to the downside here, again, resolving the descending triangle to the downside, and we see historical volatility percentile also getting up and back above this moving average and trending to the upside once again, sustaining this, that tells me that this is that this expansion is likely to come with an increase, with a decrease in price action. So search for my words once again. So we not only have volume, but we also have volatility, both confirming that move. Not only that, but if we go over here to the 2-day digital time frame, and we put on, I believe it was the 55. Bitcoin's never closed this far below the 55 exponential moving average in a bullish market before ever. We are getting comfortable like in double-digit percentage points down from that. The furthest that we've ever gotten away from it in a generally bullish market was, if my memory serves me correctly, I think right on over here at a price point, or maybe this one right over here. Maybe this one's like 3% at most. On a closing basis, we had a 4.5% move, and that's even conservative for that. I kind of gave it a little bit more than it's really worth. But as you can see back on over here, we do close below the 55 a few times in the history of Bitcoin, but we never open and close below it, and we certainly don't close double-digit percentage points below it in a bullish market. This one obviously not a bullish market right here. Before someone says otherwise, 80% pullback is in no way, shape, or form what I'm familiar with as a bullish market. Anyways, what else do we have? We do have. Let's go over to the 3-day. 3-day, I don't really have too much to add on to that. I did forget to mention this yesterday though, but 3-day did close below the Cyan 89 exponential moving average right here on the last closure. I don't believe that we've ever gotten a closure below the Cyan 89 exponential moving average in a generally upwards market. And yep, going back all the way to the Genesis, we have not. Not an over here, not an over here, and not an over here for sure. So again, another change of behavior from what we've seen historically speaking. What do we see on oscillators? Don't really see too many things of interest on oscillators. It gets a little more interesting on oscillators on the weekly. So let's go over the weekly right now and discuss the next sort of point of reference on why this is a change of behavior. There's a very obvious support trend line right here from that Bitcoin likes to construct on its bullish markets that it comes down to on weekly RSI during its bullish dumps, I suppose you could say, on all these major pullbacks right here, right here, right here, right here, right here, all lining up with these spikes down into this like 53 zone right here, right here, right here, right here. As you can see, Bitcoin has absolutely just shattered this level to the downside. And while we are testing the bearish control zone for the first time in a long time, which probably does, offer up a little bit of a bouncy bounce nature, this is once again, not very much consistent with what we've seen in the past on Bitcoin's bullish markets. If we go over here and check out weekly stocks are just down. I mean, that's not really a change of behavior. It's just they're just momentum oscillators. But the next sort of thing that I'd be looking for is the green 55 exponential moving average on the weekly. Again, we've never closed a weekly doodle below there in a generally bullish market, and we're actually going to have a chance to do that today. And of course, CMEs and GBTC have already done that. Again, not a hill that I'd like stand and die on, but just another thing kind of pointing in that direction. Going over here to the monthly. Of course, we already. The monthly can still come down to the $7,000 level and bounce off there. That's fine. But we do see monthly RSI looking like it wants to lose the exponential. I would really hate to see this happen. And remember, this will confirm tomorrow night at 8 p.m. Eastern time, assuming that we close anywhere below. I'd imagine especially below 8,000, but maybe even 8,300. We will confirm monthly RSI below the exponential, which I would not like. That's going to really start to match this up with being just another lower high before we get ready to test perhaps Perhaps, well, we get to decide if, well, after you set in your lower high, you get to decide, all right, are we gonna be doing some lower lows or a lower high? So that's when everyone holds their breath, which mostly with mostly altcoins making lower lows along the way, that I think that does increase the probabilities that this actually looks a little bit more nasty than we first considered. But of course, the alts are notoriously not as strong as Bitcoin. In the past, Bitcoin, of course, there's gonna be some strong ones here and there, but for the most part, that that would be true. Anyways, what else do I want to talk about while we're here? We looked at expected moves. We looked at that. Let's see. What else do I have on this? Let's go check out the Bitcoin Dominus chart now. I think that kind of wraps it up on why I don't believe that this, or why I believe that this is, not just a pullback, bro, but likely something a little bit more nasty. Bitcoin Dominus chart looks like it wants to pop back up here again. We didn't quite hit my target to the downside. I wanted to see a 69.50 tick happen right here. Looks like we're not going to get that right now. It looks to me like we want to test back up towards a 70.5% zone right here. But still, what we're looking at is just a range being formed. I don't see anything crazy, crazier than that happening. If we were to break down below 69.5%, then I would be looking for a major, massive move all the way down here towards like 66.5 to 67%, which is going to massively benefit altcoins versus Satoshis. Maybe not versus US dollar, but definitely versus Satoshis. But for right now, still just ranging, and actually it looks to me like we want to pop back up here in the interim. So I'd actually be looking for altcoins to get a little bit hurt versus Satoshis, but again, we're just ranging, so nothing like too interesting to be looking at. And then once we kind of hit the top side of the range, well, I'd look for us to go test some supports once again. Could it be that we are forming a support channel right here and we are wedging ourselves into some sort of a ascending triangle? Perhaps yes, but we need to let a lot more days go by before we really declare something like that. It's way too early to discuss, but it's a possibility for sure. But right now, it's still a little bit too early for that, and I'd probably imagine that most alts going to be very, very short term, hurt a little bit, just a smidgen, and then medium term, I'd actually look for them to probably get back their gains versus Satoshis once again, not versus US dollar. Let's go check out Mr. Cardano and see what he's doing, and look at that, Mr. Cardano getting faded. I do believe that Mr. Cardano comes back down to the bottom side of the range, or around 440 Satoshis. And technically we are on a bear flag right here, so that would not be good. But until we actually break this and close the daily total below like let's call it even 430 to be a little more conservative, I wouldn't get too excited about it, for like an actual trending move once again to the downside, even though, of course, higher time frames, not the picture perfect, we'll call it. Okay, what else do we want to talk about? We talked about altcoins. Let's go talk about the total market cap as well. Total over here, and what do we have? Okay, already. Maybe if we could load this, that would be great. Okay, beautiful. Yeah, so the total market cap is also very concerning. We are below all major moving averages on the daily. We are getting all the bearish crosses that bears would be looking for, except for the death cross, which is more of a formality at this point. I mean, we will get the death crosses as long as price action is below the 200 simple and 200 exponential moving average, for sure. It's just a matter of time. That's also why regaining those levels would be so important for the bulls. But looking at the total market cap, we are below where we were in May. So Bitcoin spot price is actually still above that. It's actually where it was in like early June right now, right around the $8,000 level. So is a total market cap foreshadowing a move? Perhaps possible. And as you can see right here from the total market cap perspective, there's really not too much holding you up from 179 billion longer term, and that is a measured move off this ascending triangle right here. Oh, this ascending triangle looks a little bit too perfect for me to be a believer in it for whatever reason. It's a little bit too obvious on this one, Anyways, still looks overall bad to me. Yes, we are kind of sitting on a nice little support ledge right here, but the second that this one breaks, I'd be looking for a move all the way down to the 175 to 179 billion marker right here. I'm curious what the weekly looks like. Weekly in free fall right now. Would be great if we could close this weekly above 212 billion, regain the 89, and maybe play out of bounds for the next week or so. But for right now, it's still not looking all that hot. And again, it looks bad. Looks fucking bad. Anyways, I think it's time to get back onto Bitcoin. I do want to make this video a little bit on the shorter side, as I explained before, but to kind of wrap it up, lower time frames, 4-hour support right around 7,900. If we do break that, technically speaking, there is a measure move about down to about 7,200ish region. I think it's a little bit. I think it would be a little bit aggressive to look at it from this time frame. I'd really feel a lot more comfortable with the daily closing below that level. But fair enough. You can see it in there, and as long as we're held below the 21 exponential moving average, we are trending. trading still, technically speaking. I mean, quite obviously we haven't put any higher highs or higher lows by that matter. So again, it still just kind of feels like it's waiting. But for myself, I would reconsider bearishness anywhere above 8750, and I would fully consider full bullness back above 9200 region, 92 to 9300, anywhere above there, especially on a weekly closing basis. I'd immediately become extremely bullish. But seeing as the weekly closing later tonight and the monthly is closing tomorrow, things are shaped up for a little bit more nastiness than not. But hey, if those things were to happen, that's what it'd take to make me bullish once again. But as long as we're below especially those two pivots, I am not bullish at all whatsoever. That doesn't mean that there can be bounces. I think that we could easily have a bounce in this region right here. I mean, it wouldn't take too much. Bitcoin just kind of wedge itself into this region, maybe add a little bit of a fake out, and then pump back up here, wash out all of the over leveraged shorts. I think that would be beautiful. It'd also be beautiful to get a position in there. But as long as we're below this region, I would not do not confuse bounce with the reversal. And that pretty much is the crux of it. I suppose the daily also gets it rather simply as well. Daily total close below the blue 3.7 cent exponential moving average, and that's where I start to target my next trending move towards 7,200, maybe even 6,800, somewhere in this pocket right here. Anywhere above the 200 simple, and I'd target about a $400 move up to 87.50 right here. But that still doesn't do it for me. We need to see daily total closing above there for me to get bullish. On the short, medium, and higher time frames once again, and then of course above 9,200 is where that's a no-brainer for myself. But anyways, that's gonna do it for right now. I do want to wish you all on this nice little Sunday morning, a very rainy and dreary Sunday morning. Holy shit, man, it looks like fucking hell outside. But as always, wish you well over here from Chicago, Illinois. Take care and see you soon.